what happens is these public market valuations are coming down. That's going to impact my world, the venture world, because private companies.
Yeah, canned. Wall Street using tech firms like Zillow to eat up starter homes. We saw that this morning. Let's see if there's any other particular news. COVID fraudster who bought property in Tesla stock with stolen cash is caught. Scammed $3.4 million in COVID relief loans. Ooh, wow. I wonder how many more people like this there are who are scamming the system. We need is a government that can actually build more homes, but most of our governments are quite frankly incompetent. So investors brace for slowing corporate bond sales.
Shopify, Square, Zillow, Twilio, DoorDash. The problem is a lot of this stuff either doesn't make money, Twilio doesn't make money right now, or the profit margins are razor thin, meaning they're not making much money. The stock price is really high, and the amount of money, the profit is really small. So
this is absolutely 2.0. If you look at and .com crash 2.0, if you look at, you could put together a basket of stocks that were some of the high flyers that are down anywhere from 65 to 80% off their 52-week highs. And it's a function of, first of all, those valuations never made sense. It's also a function of where we've seen rotation in the market that's been going on, not for 6 weeks, but more likely 6.
It's kind of a similar scenario to Zillow, but on a much smaller scale. This is not what you want to see. Definitely not what you want to see. What happened?
I think there's some idiosyncratic ways to play housing still. Maybe like a Zillow down $150 from the peak could be interesting. And consumer services, maybe you can buy a couple of the restaurants that as things reopen look interesting. So I think there's a number of diverse opportunities on the buy list. I still think there's also things on the short list too, and we can go.
Their Tesla position by over $1 billion, but it's still rank 1. Next is Zillow with over $800 million in decreases since the start of October. It's now ranked 71. That's way more interesting, even though it's technically a smaller sale than Tesla's. There's definitely a video about how Zillow entered, messed up, and catastrophically exited the online home buying market, and how Cathie Wood sold Zillow stock as a result.
Zillow's currently at 52. All right. I think this stock goes to 75 by the start of 2023 based on early EPS projections.
They feel wealthier because their account says ... They go on Zillow, their home value says ... They pull up their crypto portfolio, it says ... They pull up their Moomoo account, which by the way, get your 5 free stocks from Moomoo. That'll be pinned comment down there. Get them before they run out, okay? Because
the third name is one that I have covered on this channel before. It's Zillow Group. If you recall, Zillow shut down their home buying business, which resulted in a mass layoff and sent the stock cratering. And I did cover it at that time on this channel as not a buying candidate just yet. But the story has gotten a bit more interesting now as the share price continues to decline and is now down 76% from its high of 100.
Watch that very, very closely. You also have Cloudflare, Zillow. Zillow can update on their disastrous offloading of overpriced properties that they bought. Aor is reporting and representing MJ. You got Expedia, Upwork, Dexcom, HubSpot. But then on Friday, and Fridays are usually slow, but Friday, the big one that you want to watch is Magna. Magna is a company that manufacturers for many automakers and EV manufacturers in the future are using to build out and help them manufacture crucial parts or entire cars that they need for
Twitter, Pepsi, Coca-Cola, Affirm, Zillow, Cloudflare, Upwork. Ooh, it's going to be a fun week. All right, cool.
So low stock, this is one that I own with a cost basis of about $69 or $50. And that is coming off of its all-time high of almost $200 back in February of 2021. Of the buying arm on Thursday, February 10th, that's the next earnings report. And that should give us a little bit more visibility on where profitability sits going forward. They probably... All right, now just taking a quick peek on Google Trends, just comparing Zillow itself for the homes for sale search term and then the next leg down, right? So maybe instead of bumping up to this level, in 2022. Maybe it only gets up to the trend line of 6,000 or so. And I'm not sure that would surprise me too much, but be the headline story for Zillow. It's going to be back up here with an EPS growth, which isn't going to attract as many growth investors, but it does have the opportunity to set you up well for the long term if the company is able to start printing money on the profit line. All right, another small variable that they announced in December that could help if it gets extended a little bit more is the stock buyback program. Back in December, they announced coming out of the next earnings report. All right, so bottom line with Zillow's stock. I think it's very understandable for the negative headlines that you're going to see with this one, particularly with management kind of changing direction. But I stand by the fact that it was a good move in the long run.
For a little while. That's okay. I can be patient.
And you are. Zillow reporting earnings tomorrow after the bell. That's one that you are in. It's iBuying unit closed down. So what are you looking for at this point?
Right. So they closed it down. They said they would take a bunch of charges. I think those charges, they will continue this quarter, but I think they're going to be way lower than the company had laid out. I think that they're also in the middle of changing their model somewhat. So the agents actually will share some of the commissions with Zillow instead of paying for the service. So it's in a little bit of a transition, but I love that they got rid of iBuying. I love that this is now a much more asset-light model, and they want to be the place to go and give you also mortgages and titles and things like that, all those kind of services. I don't think it's expensive. I think that the balance sheet is even better than it appears because the debt goes with the houses that they're going to be selling.
They estimate that a quarter of all buyers in the U.S. reached out to Zillow, but they only generated revenue from 3% of those people. Do we think about it as closing that gap, as touching all of the quarter of all U.S. home buyers?
You know, rich doesn't even small, Melissa. So I think that's probably what they want you to buy into. You know, they're talking about 5% buy-side share. They're talking about 3% total transaction share.
Stocks moving in the U.S. pre-market, starting with Zillow that reported earnings yesterday. 13% move pre-market. The shares had wiped out about $35 billion in market value last year when they announced that they'd be winding down that automated home flipping service. Zillow yesterday on the call is saying that they were moving quicker with winding that down, also developing something called a super app for housing to help people buy and sell housing. But those ambitious targets getting the market exciting. DD to the downside this morning, however, of course, the U.S. ADR. It had rallied yesterday after some filings that we saw Tencent taking a big stake in DD. Well, Tencent coming out today saying that actually that stake was. So, yeah, that's the macro. Let me dig into the micro. Zillow, one of the biggest stocks moving up pre-market in the U.S. Those shares up more than 13%. They reported earnings after the bell yesterday. Zillow has had a tough run of it since
years. And the degree to which Zillow is going to be a software and platform provider to the whole real estate industry, including landlords, and to the extent that you're really looking to focus on sale transactions?
I mean, our rental business is really strong. It is strong, but nascent. And the macro setup for rentals right now, John, as you point out, is kind of difficult. Rents are soaring, vacancies are low, not a lot of money being spent by landlords on marketing model there. But we have made a really great kind of Zillow 2.0, what we call moving towards the transaction investment in rentals. We have digitized and automated applications. We have all these landlord tools where they can actually collect rent using their Zillow Rental Manager app. We think we're setting up really nicely to be the place to go for both renters and landlords, bringing the two.
Today. So what exactly is going on? That's exactly what we're going to cover in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. About their earnings that caused the share price to increase so much. And it really just comes down to that the shares soared because the company has a more upbeat outlook on their business. Days when I was looking up homes in the US before Zillow, and the in-person touring I thought is really cool. It recently saves your work address, so as you're looking at homes, it tells you how long the commute is in and out of rush hour traffic. And I think what Zillow needs to do is continue to figure out if those other apps are offering something interesting. I'm not so sure about the seller solutions that are enhancing the partner network. I think those are good areas that they continue to have to look into, but I don't know it enough to comment on it. But the one area that I'm a bit more confident on is the integration share. And add to that the Zillow home loans, the Zillow closing services, the Zillow 360 bundle services, and just general home price appreciation. They're looking to increase the revenue per customer under $50 a share. You guys let me know what you think. I'm happy to sit this one out. I know some of you guys do mention that it's almost impossible to find stocks that are trading for 50% of their intrinsic values, especially leading companies like Zillow. I agree with you guys. Investing for me is not easy the way that I buy securities. I might buy 1 or 2 stocks a year and then just be sitting on large cash piles. And so that's how I personally feel comfortable investing here. And so go ahead and grab the model.
Redfin, we have Zillow, ticker symbol Z. I own the ZG. Part of this stock, and this one's really like right at the line. I might be cheating a little.
Of when this doesn't work. And for that, I'm going to use Zillow. Now, I like Zillow. I use them for my rental properties. I don't own it anymore. So this is trading. But having a plan around a setup that you enter lets you avoid what I call the uncanny valley of risk, where you become an owner in this company and you just kind of hope they do well.
That it's time for, and I hope President Zelensky, now he's declared martial law, get those barricades up, get the civil defense out there, be prepared to fight every street, every block in Kyiv. Any sensible military planner would tell you that you might have to have defense in depth. And the final ring.
Gave up a lot of its post-earnings rally, I believe. On the market, it's on the MLS, it's on Zillow, it's on Redfin, it's properly marketed, it's properly listed, so you could use
positive housing stuff after the market. I bought some Zillow 1x2 call spreads. I think that was kind of overdone and interesting, so it was a busy day.
The problem with having it all clear is we don't have Putin out of the way. Could have Powell out of the way, but we could get a negative headline tomorrow. So you have to be cautious about the rallies within the marketplace when you have a madman still in Russia. Mm-hmm. So that's the only hesitancy that I have. But
it's called the Zillow mortgage calculator. Not that big of a deal. 4 to 5 months. That's a poop show. You went from 2.8 to 4.3. That means if you try to go refinance, a $500,000 home right now, you're probably getting quoted 4.75%. And you're like, what?
Purchased more since then. And another name that has been coming down is Zillow Group. So you can see that it's trading around 60% of what I perceive its intrinsic value to be. And I really like this company. This is because this company is really set up for an inflationary environment, and it becomes more of like a top echelon type company for me. That being said, if you look at the model, you'll see I generally model companies in an insane level of detail. I go down through most lines on the P&L.
Your estimated monthly cost, according to Zillow, would be about $3,500 a month to own this home if you had put a deposit down 3 or 4 months ago in late 2021, early 2022. But now fast forward to today, and with the mortgage rate up to 4.8%, your monthly cost is now over $4,000 a month. Now,
That's about a $600 difference there, and that's the sort of difference that for many home buyers just that's it. Like they can't afford it then at that point, because a lot of people
2 months home supply, and that's it. And so a Zillow survey went on to say that the lack of supply is not going to last forever, but are continuing to increase, and housing stocks are getting crushed. And what this article author is saying is that don't expect these companies' share prices to find a floor until rates find a.
It's like if they have a real estate property, they want to see it on Zillow every single day. The pro says, I know I have a good investment, and in the long run, it will be worth more. Lazy.
They have basically followed the lead of Zillow, who has since given up on it, and go out to people like me, retirees, and saying, if you don't want the hassle of working with a real estate agent, let us come and look at your house and we'll give you a cash offer for it. And then they go in and they fix it up and they sell it. Well, this is a report that I got, as I said, as a part of the information that I buy. And it's basically, it's from Luke, and Luke basically says that I think there's some potential there. And I know this stock. I know Zillow. I was a real estate agent. One of the first stocks I said I want to follow was Zillow here. And you can see it tracked. Zillow was a pioneer of this. And
The biggest concern I personally have for Redfin is the Zillow effect. Remember when Zillow almost probably went bankrupt on the whole iBuyer plan where they're buying homes and trying to fix them up and flip them? That's a big issue for me, to want to own a company like Redfin, because, if you own billions of dollars, $4 or $5 billion worth of properties, and then you go into an era where home prices are falling 8% to the downside, it's actually pulling Zillow down with it, $4 or 4.66%, followed by Roku at about 4.6. Rivian. There were some articles yesterday about Rivian and potential bankruptcy. Oh my gosh.
My portfolio once the valuations get better. And of course, this list is accompanied by a full detailed model on every one of these companies. So if you wanted access to that list, you can get access to it at the $5 a month Patreon tier, but I'm not going to plug that right now. So moving into it.
Maybe. Who knows? After Zillow's big loss,
value is approximately $60 per share. There's Zillow Group that I discussed. It's trading at 52% of its intrinsic value. There's
peak travel this summer. And then you have Zillow today, peak real estate. Zillow, real estate company, peaking for demand, peaking prices, rising mortgage rates. They basically were somewhat downbeat, saying this is it. Now, this is good news if you're out, looking for a house. People have been complaining about how stupid the prices have been for houses for a long time.
How real estate's doing? Zillow reported last week, no bueno, okay, no bueno. I think companies like Zillow and Rocket are important to look at if you want to get a gauge on, essentially how companies are doing. The other place you can always look, obviously, is companies like Toll Brothers, companies like Pulte Homes, KB Homes, the home builders. Those are always good ones to look at as well, all right? Now, as far as Tuesday, Peloton, not nearly as big of a retail stock as it once was.
Today, it just doesn't strike me as a good time. Zillow is one that while the real estate market is in a lot of distress with the high mortgage rates and everything like that, I didn't buy Zillow to make money this year.
Stocks were just taking off like crazy. We've all seen it. Zillow literally went from $34 to $202 back in 2021. Now it's back at, as of today, May 9th, it is at $36.74. C3 AI, trash. Zillow, trash. Pinterest, trash. DraftKings, as much as I like DraftKings in 2020, $3, trash.
So it's still cheap. It's still in that green category. You can see Zillow. I actually really like Zillow. So it's trading. Will weather this recession, and I do believe that Zillow will continue to outcompete its competitors in the future.
Money in this place for all the value just keeps going down. I look at Zillow and it's down another 10,000, and so you go from like this psychological let's put money in it because we'll get it back out, to all of a sudden it's like no, it's just getting worse and worse and worse. Ship the whole pool out.
10% plus Shopify, Farfetch, Zillow, Square, Fastly, Etsy down 10% today. I mean, they just won't even let these stocks breathe for a moment. Not a moment, okay? And, in terms of my opinion on a lot of these stocks, are they close to a bottom? So I think a lot of these stocks are closer to a bottom than maybe some of the bigger dogs. But with that being said, it does.
Yeah, this week I bought Zoom, I bought Zillow, I didn't buy Snap, but all three of those names have never been cheaper on a trailing price to sales basis since they've been public companies.
I mean, in the last couple of weeks, you want to add some names to your shopping spree, if you want to call it that. Twilio and Upstart and Carvana. So, I mean, you've been really looking at the ones that have been hammered the most.
Zillow is getting back to basics. It's getting out of the home buying business. It makes much more money in its traditional business. And if you look ahead to what they're going to continue to make from it, again, it's never been cheaper as a public company.
I mean, the tech trade, I feel like there was a moment this week, and maybe it was NVIDIA, right? The earnings come out. Everybody has loved that stock. It's gotten, it was down like 45%.
Pretty much at its lows. I'm down around 63%. Would you say Zillow is a hold or sell right now, or maybe even a buy?
I can't say buy it. I think that the company has in many ways made so many ill-advised decisions of late, and they're not making money when you look at the past. In the future, they might. It is still an expensive stock. So the answer is I can't go there. All right, guys, listen. I'm trying to describe a world where some of our favorite stocks have been crushed. Amazon, Facebook, and Google. Now, Facebook, by the way, is Meta.
And what I've come up with are Peloton, Zillow, Carvana, and Netflix. And these companies are not hedges against my longs. There's a lot of long short managers that do that. They try to do pair trading. I'm not doing that. I'm saying that these are companies whose business models are broken, that did see some very attractive performance and demand during the pandemic.
About this, right? The news flows out of China remains bullish, with zero tolerance will keep China lockdowns risk elevated, but
access to at the lowest level. You can see that Zillow is actually trading under 59% of its intrinsic value, or at least they eliminated this home segment business, and losses are actually expected to be lower than originally forecasted due to this past week were Sleep Number Corporation and Zillow Group. And that's what we're going to dive into in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. It's down 5%. And let's dive into why these names were down so much. So starting with Sleep Number, you can see that the company is still having supply chain issues. They're still struggling. The company has seen an increase in delays in its first quarter of 2022, with 40% of its products expected to take either 6 buying territory for this name. Now, moving on to Zillow. You can see here that Zillow is actually down almost 5% over the past week. And what's really happening here? Well, notice that people are now starting to get afraid that the month's supply of housing inventory is now at 9 months. But I do
year, if you look at all the private sector indices like Zillow, they're going up much faster than that. If you look at the inflation numbers, medical care is still looking low. I don't know what that number means. Every time I talk to anybody in medical care, there's a desperate nursing shortage. There's a huge backlog of elective procedures. So I think that number's going to be going up. So I think we've built ourselves a stagflationary kind of situation. And as I've been saying for months now,
in sale data. It's not like you can go on Zillow right now and see a closed transaction and it says, oh yeah, we gave them 20 grand to pay this price as a credit back, right? You usually don't see that.
So you can see Dreamfinders, LGI Homes, and TriPoint Homes are builders. Zillow, of course, is the search website, and Opendoor is a buyer and seller. And said that they're going to be slashing 6% of their employees due to market conditions. Remains at historically low levels. This is my thesis for
incredible. Unity Software, Peloton, oh boy, Peloton, Zillow, Teladoc, Ring Central. You got Wayfair, AMC, Carvana, Nikola. Oh, Nikola. By the way, Nikola, there have been some trucks spotted around Phoenix that are actually driving, not downhill, and are driving pretty well. So, I don't know what's going on with that Nikola situation, but what I will say is there's actual trucks going around Phoenix that are Nikola trucks that are semis that are driving around.
Zillow Group. So it's interesting to see that more and more names are coming into the tracker. And the other interesting thing is there's now 4 names that are cheaper from a price to intrinsic value perspective than Alibaba. And that's something interesting because before, early on, Alibaba was the cheapest one on the tracker. And now there's...
Grab, look at that. Amazon down 7%, Disney down 13%, Zillow down 15%, Tesla down 13%. You have the Nasdaq in here over 8% down, the Dow 9.3% down. This, folks, was March 12th. 2020. I have a screen grab recording of this, and it just really reminded me of, wow, that's kind of what a cathartic flush out looks like. That's what it looks like when all of a sudden the volatility index goes from this insane low where things are relatively benign.
You've got names like Zillow, CrowdStrike that are up anywhere from 40 to 80% off of their lows.
It is like...
And when it comes around,
New York is a big rollover.
Is
And don't look at Zillow. You're down like 25%. Your west side in the 80s.
I don't look
You're
at it.
down 20. I look at his all the time.
Thank you.
Are
you
no
planning on buying me out?
Look, I'm busy looking at that. I'm not listening to Bill McDermott talk on my show. Can I just say once again, let's go back to Bill McDermott. It is without a doubt, the dollar is the single biggest problem. And that's not going to go away if the Fed hikes. It's just going to be accentuated.
Right.
So
you can see that I've shown a couple of them. So you can see that there's Zillow Group there. It's highlighted green because I believe that Zillow is an exceptional company and a best of breed. And so
you bought the home for $582, but it actually shows up on Redfin and Zillow as me having gotten $600. So there's a really big sort of gamesmanship element that happens in real estate, especially new construction. This is really prominent in new construction, that can really delay our ability to see price drops. So it's still going to take time. I think we'll get more clarity over the next 2 to 3 months.
Valuation, which you can click into when you is trading at approximately 50% of their intrinsic value. Zillow, this is a name that I own in the portfolio. Dreamfinders Homes over there. TriPoint Homes is up there. Zillow Group is up there, and LGI Homes is up there as well. And
might be worth a trade here. All right, last but not least, Zillow. Karen, this is in your portfolio?
It is in my portfolio, so trade it would be the right. Clearly it's down for the year, which hasn't been good because of the housing association. But I really give this management team a huge pat on the back for getting out of the very asset-heavy home owning business. They did a great job of liquidating that. So I like what they're doing there.
Percent of its intrinsic value. There's TriPoint Homes, there's Zillow Group, and there's LGI Homes. LGI, of course, is my favorite home builder. And so,
which we just saw. Oh, Zillow reports in an hour and a half or so. Open Door is going to be next, along with Rocket Mortgage. What? Zillow and Open Door announced multi-year partnership? Oh, that is going to be really entertaining. Oh, I can't wait to go. You know, we might have to do that one in the course of a live stream versus Solar Edge. Woo! Open Door down 6.8%. Give us some more discounts here. That's actually good. Okay. Zillow's basically like, hey, we have all these leads for home sellers. Why don't we give them to you, Open Door? 3.4%. I think that Zillow partnership is going to boost them a little bit. It's going to be a fire hose of leads. I don't know if they'll be quality leads, so it's too soon to tell.
About 10%. And for both Twilio, which is a software company, and Zillow, which is that online real estate company, they both gave forecasts that came up short of expectations. The reason why is just a softening macro environment. Of course, for the case of Zillow, it's a softening housing market. They are each down about 7%. And finally, Block, formerly Square, Jack Dorsey's company, missed expectations on payments volume. Part of that has to do with a drop in Bitcoin-related transactions. That stock dropping about 6.4% before the bell, Anna.
Interesting you mentioned housing. I've seen headlines from the UK to Canada, all looking a little gloomier on that front. Kaylee, not much upward energy.
One on the list, we have Facebook. Number 2, we have Cirrus Logic. Number 3, we have Zillow. We have Google. We have GoPro. We have 6 Advanced Micro Devices, one of my biggest investments. Number 7, we have Fitbit. Number 8, we have Qualcomm. Number 9, we have Chipotle. And number 10 is Under Armour. So this is just a list of 10 companies that I consider to be growth stocks. Okay, now we're going to get into the good stuff. And by that, I mean the absolute garbage. We're going to talk about speculative and penny
that Opendoor is currently holding. So yes, they partnered with Zillow to buy homes from people. But who's going to buy their homes from Opendoor? I mean, this is the main problem. This is why the company guided, their revenue 50% down from 4.2 billion to 2.2 billion. Because we have more interest rates, we have higher inflation, we have a real estate bubble, and interest rates is going up much more, especially as the Fed starts tightening. And it's a home flipping business, and they're trying to do it. So yes.
And a strong sell on Rocket Companies, mortgage company, and Zillow.
Again, part of that housing ecosystem, mortgage refinancing is down 65% year over year. The forecast from the Mortgage Bankers Association is very bearish looking into next year. And you need volume really to drive those businesses. And Zillow is looking really for a core business, exiting the iBuying, buy and sell homes. So I think it's a failed company. The bright note really, or the fork in the road, is home improvement. 98% of U.S. households don't move, and the wealth effect with higher prices means that they're not going to move to another home, but they're probably going to improve theirs. So we're positive on Home Depot with a buy. And again, everyone's focused on the Fed and
research that goes against what my conclusion buyer demand wanes. And so in other words, Zillow's agents don't pay for idle eyeballs, they pay for motivated leads. And so effectively, essentially what he's saying is that Zillow, after canceling their iBuying business, they've gone back to becoming a platform. Well, the platform makes money off of ad spend, and one of the major customers for their ad spend is real estate agents. And real estate agents are not going to be placing ads if the market is drying up. So effectively, you have a dead business model in this current environment, at least in the short term, that gets them closer to their vision of an integrated digital experience to help consumers crocodiles into this mode. And that's what I like to see for a company like Zillow. So that's why I'm still a buyer. Now, it's going to be a tough go. And I actually...
So what you do is you find your stock, say something like Zillow or, one of the many others, sort of growth companies and general companies in there. And if it's on the list, what do you need to look up? Well, you look up how much cash that company's got. Second thing you look up is how much cash they are burning each quarter. What's the negative free cash flow? If you can't find that number easily through Google, look up their net profit number. At least they'll give you some indicator of what they're burning in a month. And now
something's very telling in that, right? Zillow, I haven't really looked at this stock in a long time. I just took a peek at Zillow today. First off, Zillow is down almost 16% over the past 5 years. I mean, to lose money in a stock over 5 years is rough, right? I mean, to lose money in a stock over, or be down on a position over a 6-month span, 12-month span, even 18-month span is kind of understandable, but 5 years, no. So this stock's down over the past 5 years. And the interesting thing with Zillow is, when you think about the real estate market, and the massive cooling that's going on in the real estate market, right? I mean, that does not bode well for Zillow, ultimately. Like, people don't like to log into Zillow every day to see their home value goes down. That's not so fun for most people, right?
There is a 3 out of 4 chance in Phoenix, Arizona that they lost money. Both Los Angeles and Phoenix and the nation overall, of course, had substantial appreciation over the last 10 years. But that doesn't mean you buy in January to April at the top of the market. But Opendoor had an excuse for this. They said, well, we didn't want to cancel contracts on our customers for a brand